Rakesh Arora joining us. Rakesh, good morning. We are seeing, global markets stabilizing somewhat this morning. Also, the week post-budget now, as we kind of move ahead from that, are you taking a relook at strategy? Is it status quo? What's the sense?
It's largely, status quo for what we were thinking at the start of the year. Obviously, this coronavirus has shaken up things a little bit, and expectations were running very high from the budget, which didn't really get materialized. However, Indian economy is on a mend, and the thing we are watching is credit growth, which is what is really going to drive the markets and the economy. And I think there are green shoots. So after a clampdown in the last 2 to 3 quarters, when we saw NBFCs, even if they were having liquidity, they were not really, lending out, starting to lend. And I think this is what is going to drive, the economic growth upwards, and markets will follow suit.
Okay, so you're actually, you're convinced that we're possibly bottoming out, and you do see that recovery in the next couple of quarters, Rakesh?
Yeah, so I think even Q4 would start to look much better, and there would be tailwinds because everybody is expecting a very solid rabi crop, which is going to really help in rural spending. And number two, all the initiatives that the government has taken last year, including the corporate rate tax cut, that should also start to manifest itself on the ground with some capex picking up. And finally, government has come out with a clear guide plan on the national infrastructure, and I think that gives us good visibility. I'm expecting a lot of bunching of orders from NHAI, so things on the ground should start to kick in from the current quarter itself.
Rakesh, just looking at the texture of the market, we've had 5 steady weeks of a recovery come by in the broader universe, while the Nifty has receded about 1.5% to 2%. Do you think the much-awaited broader market revival has now kicked in and it's here to stay?
I do believe that a broader market recovery is on its cards, and we're already seeing a lot of small companies turning around. We are dealing with a lot of small caps, mid caps. Most of them have been struggling with liquidity issues last year, but now seems to have either cut costs or refinanced or raised a little bit of equity. So most of the companies are starting to look better. And I'm pretty sure that the fund flow would get shifted from large caps to mid and small caps. So a broad-based recovery is likely in 2020, and that is the stand we had at the start of the year also.
Rakesh, the other thing is that, the market of late has really taught you that it's all about survival of the fittest. It's the Darwin theory playing out just about in every sector. It was first in the Nifty, the polarization played out, and somewhat you can see that within the broader end of the market as well, where the sector leaders is what everyone's been gravitating towards. Do you think that's a trend which is going to replicate itself even in this mid and small cap recovery?
Yeah, meaning lack of liquidity to smaller players meant that large companies were able to capture market share. So that trend is likely to continue. It's not going to change materially. Even the smaller companies which are coming out of this whole death zone, as I say, are likely to consolidate even further before they get into a growth mode. So clearly, large companies have a better playing field as of now, but valuation gap is quite high, so meaning large caps are already factoring in continued market share gains, and small companies were more factoring in kind of a bankruptcy kind of situation. So it is just a normalization of valuation for those companies who have survived, which is what is going to drive the rally in small and mid cap. But longer term trend of large caps gaining market share will continue, in this economy where everything is getting formalized.
What about commodities, Rakesh? We've been discussing them to quite an extent this morning. Do you see a swift rebound or are you kind of concerned about the crack?
Well, so normally commodity rebounds are very sharp. It's difficult to catch them, and everybody is hoping that Chinese government will come out with stimulus once they have kind of settled this coronavirus issue. And already they have infused liquidity 2 days back. So there's already a possibility of a rebound which everybody is starting to build in. Also remember that while there's demand destruction happening in China because there's a clampdown on 2/3 of the economy, but also at the same time supply is also getting curtailed. So it is not that supply is continuing and only consumption is getting curtailed. And normally, historically, whenever China does a stimulus, it is very capital intensive kind of stimulus which requires a lot of which creates a lot of demand for commodities, and commodities are first to go. So our Indian stocks have corrected between 15 to 20%, and probably are looking like that they might be nearing a bottom. So buying on dips could be a strategy for commodity stocks. Obviously, we'll know the full extent of coronavirus only by early March when things peak out. But till that time, I think buying on dips would be the recommended strategy.
Note, Rakesh, thank you so much for that advice. Buy on dips for Indian metal stocks. That's the word coming in from Rakesh. Good to have you on the show, Rakesh, as always.